Right now, we're working for you. And you know what? A house can often be someone's main investment. Since many people are aging in place, they may need to tap into that equity for a number of reasons. Well, the experts at Franklin Funding Reverse Mortgages can explain how a reverse mortgage can actually be a retirement tool for your benefit. David Heilman joins us right now with an in-depth explanation. So, David, what exactly is a reverse mortgage? I see these commercials on TV all the time. I have no idea what it is.
Right. A reverse mortgage is a unique type of loan. It's actually a loan that's insured by the Federal Housing Administration, and it's only for seniors 62 and older. So it allows them, what it does is it allows them to tap into a portion of their home equity without having to sell the home, give up ownership or title, or take on a new monthly mortgage payment.
So how exactly is that going to work if someone's watching at home and they think that they might be on one of these kind of things, they want to tap into that resource, how exactly do you go about doing it?
Yeah. Well, you apply much like a traditional mortgage, or an appraisal's involved, and all the traditional things that you think with real estate are all involved. But how the mechanisms of the loan work is essentially your payments are deferred until the end. And the end could be when the homeowner decides to sell the property, or when they pass on and the heirs then sell the property.
Well, that's a point I wanted to make, because who can benefit from this reverse mortgage? You say it's certainly not for everybody. You really need to do your research, and that's where you guys come in.
Right. I do start off usually by saying, look, this loan is not for everybody 62 and older. Who it's for, we really see three different types of people. We see the needs-based people, the clients that need this money right away. They have an immediate need. Maybe it's to pay off an existing mortgage and take away that monthly mortgage payment, free up cash flow. Another type of client we see are security-minded folks. We see folks that get into the reverse mortgage and just establish a line of credit. Pull from it as they need it and maybe even make a payment on it. So you're allowed to do that as well. And then the third client that we usually see is a lifestyle client, as we say. Those folks are usually either trying to maintain a lifestyle or have a lifestyle that they'd never had before.
Okay, so great. So a lot of different things right there. And what impact do these reverse mortgages have on kids, on heirs, if you do pass along? How's it going to get translated down the line?
It's a very good question, and we hear it a lot. First of all, I would like to say that we have more adult children bringing their parents to us than ever before. So they're bringing their folks to us, say, Mom, Dad, you need to take a look at this. But what happens is important, and we like to have a consultative approach and sit down with the family because the heirs do have a role. When Mom and Dad no longer use that home as their primary residence, the heirs have a choice, and that's important. They have a choice. They can sell the property and retain any equity that's in the property, or they can refinance and keep the property. They could refinance or pay it off with other assets. So they have the choice to keep that home in the family. It doesn't necessarily go to the bank, which is a big misconception, or the lender.
And why does someone want to go and talk to a financial planner about that? Why is that so important? Because these are really difficult things that you may not want to attempt on your own.
Absolutely. Sound advice from a financial advisor, a CPA, family members, highly, highly encouraged. We want to be a part of the conversation. It's a solution for many people. It's not a product that we want to push or sell, but it is a financial solution, and getting the right sound advice is very important.
And David, what advice would you give somebody who's out there right now watching this segment and might be considering that reverse mortgage?
A couple of things. The first thing we like to say is, like I mentioned before, make it a consultative approach.
And bring in the family, right?
Right. Bring kids to the table, bring family members, bring your financial planner into the conversation. It might not be a right fit for you, but let's have a conversation and see if it is. The second thing is don't consider a reverse mortgage a loan of last resort. A lot of folks really think, well, once all my other assets are depleted, then I'll tap the home equity. There's a lot of new studies out and a lot of research that's being done in our industry right now that shows that if you tap it early, if you do a reverse mortgage early in retirement and manage it well, it's going to extend the life of your portfolio.
Is it like a 401k where you might get taxed on it by the federal government at different rates at different times?
Good question. No tax.
No tax.
It is a loan. It is proceeds from a loan, so there are no income tax on it.
All right. Well, if you want to learn more about reverse mortgages or any other financial planning, there's the information right there. Franklin Funding. They can help you out. Check out that website or call that number right there. David, thank you so much for your time.
Thank you.
Really informative. We do appreciate it.
Great. Thank you.
All right. Much more Lowcountry Live after this. Stay with us.